Hi, I'm Ron Wineholt, Vice President, Government Affairs, Maryland Chamber of Commerce. Once again in this session, we're dealing with a major tax issue in terms of how businesses should be taxed under the corporate income tax. The issue is called combined reporting. About half the states use a system of combined reporting, which requires all businesses in a corporate group to combine their taxable income together when reporting their tax liability to a state. About half the states that use that are mainly out west and in the New England areas. The other half of the states, including Maryland, use a system of separate accounting, which requires every corporation to individually report to the state its specific tax liabilities for its business in the state. Now, as you might expect, these two approaches produce significantly different results. Not that one is right and one's wrong, but just very different results for businesses. For example, adoption of combined reporting would cause about 1,900 corporate groups in Maryland to pay about $223 million less in taxes, while about 2,400 groups of corporations would pay about $390 million more in taxes. So significant shifts between corporations and even within corporate business groups, between industry types. Some pay less, some pay more, very big tax shifts. So that's a significant issue for businesses in terms of how they're affected by this type of tax change. Now, the proponents of combined reporting suggest that it's necessary to close corporate loopholes. And of course, we would have to disagree because the General Assembly has already addressed some of the major issues in that regard, such as the Delaware Holding Company law that was passed in 2004 and the captive REIT law that was passed a couple of years ago. These measures passed with our support because we realized the necessity to do something about this. Now, we think the proper answer to addressing combined reporting is to let the Business Tax Reform Study Commission complete its work. This is a group that was set up about 2 years ago to look at businesses and how they're taxed in the state, and then look at a wide variety of issues, including not only combined reporting, but apportionment, tax credits, tax exemptions. There's an 18-member group. We have business representation on it. They have about a year of their work remaining to be completed. They'll come back this December with their recommendations, and we think it's necessary to let this group complete their work. We had hearings on 3 bills within the past week or two, House Bill 10, House Bill 584, and Senate Bill 354 in the Ways and Means Committee in the House and the Senate Budget and Taxation Committee over on the Senate side. We think the hearings went pretty well. Some nonprofit groups as well as unions supported legislation. Several business groups, including the Maryland Chamber, opposed it. We were pleased to hear last week that the chairman of the Senate Budget and Taxation Committee, Senator Yulee Curry of Prince George's County, indicated his preference to wait until next year to address the combined reporting issue after the commissions completed their work. So we're cautiously optimistic that the General Assembly will not act on this issue this session and come back next year and deal with the broader issue after the commission has given their recommendations. So that's how we see it at this point. Check back with the ChamberActionNetwork.com for more updates.